Yes, we are discussing about US Federal Bank, US Federal Bank rate cut. So rate cut. So US Federal Bank. So generally it is similar to that of Indian RBI. So Central Bank of USA. So which first time it has undergone expansionary policy since the COVID. So expansionary policy is nothing but so increasing the liquidity in an economy. Okay. So by following the reducing the or reduction in the interest rates or lowering the interest rates. So generally what would happen? So whatever the amount, so the loans or amount borrowed by the business community in USA, it became cheaper. And wherever they invest in the government bonds, so they yield very little. So if the business community invested on the treasury bills or whatever the government bonds, their returns would be very low. So in this purpose, what would they do? So how would it impact on the Indian economy? So that we are going to see. So first of all, you can see because more liquidity availability as well as less returns coming in the US market, the money goes into emerging markets, especially like India. So that means capital flows increases in emerging markets, especially in India. So capital flows are in the form of FDIs, FIIs, or any other means. So next one is rupee appreciation. So rupee appreciation because the more availability of the dollars for Indian purpose, the rupee value strengthen. That we call as a appreciation. That means we have to give lesser units of rupee for the single dollar. So this is the how what would happen. So imports became cheaper. So for small units of rupees, we will get the more goods. That became imports become cheaper. At the same time, exports lose the competitiveness. So overall, rupee appreciation has neutrality on the trade. So neutrality on trade, neither positive nor negative, because imports when at a time imports became cheaper, at the same time exports became costlier. So whatever the benefits that got neutralized by the eroding the export competitiveness. So boost to stock markets. So the emerging markets, stock markets are generally receiving the more money from USA or dollars because here they will get more returns when compared to American domestic market. So FIIs as well as higher valuation of the Indian stock markets. So all the stocks because of strengthened the total quantity of the Indian stock market value that increases. So trade impact that already I told you because of rupee appreciation, it has mixed impact. So neither a positive nor a negative impact. It is moderate or mixed impact. So more liquidity, more demand for the goods in USA. So that they can import more number of goods from India. At the same time, so the exports became competitive decline, thereby whatever the benefits, it got neutralized. That you should remember. So next, inflation pressure. So when more money comes into India, the liquidity available in domestic market, thereby purchasing power of the people increases. So when purchasing power of the people increases, that means more demand created in domestic market. So then it should be price increase. But at the same time, so we can able to import the goods with lesser prices. Thereby it offshoot the inflation increase. Thereby what we can say, inflation pressure on Indian market is moderate. So neither positive nor negative. So when demand increases, inflation increases. That offshoot by the cheaper imports. Understand? That is the another impact. So RBI monetary policy. So that means when yields, returns are less in USA market, they are looking at India. If India also giving lesser returns, then they go for the another country. That means Indian RBI should follow easing of its monetary policy or at the same time expansionary monetary policy. So if we want to tap the benefits of federal rate cut, Indian RBI must and should go for the expansionary monetary policy. So that you should remember. So to maintain that, the flows to be consistent as well as the differential interest rates are the mandatory. So next, lower borrowing costs. Because of more money available in the US markets, Indian investors as well as the government, corporate people, everybody can access the loans from business community of USA with a cheaper interest or lower interest. So lower interest that we can use it to pay the earlier debts. Understand? So there will be fiscal burden reduces. So this also you should remember. Fiscal burden reduces. So next one. So what about that external debt? So because of more dollars are available and Indian external debt constitute dollars more in. So Indian external debts are more in dollar. So we have to pay in dollar. So in terms of external debt, because of the dollars inflow, we can easily repay the external debt. Understand? Debt servicing became easy. So especially external debt. Internal debt are always resettled in the rupees. So external debts always resettled in the international currency, especially dollar. Understand? So next FDI increases. So FII, foreign portfolio investments are, so for foreign institutional investors. So these are all short term, they can come and go at any time. So whenever profits are more, they retain their investment in India. Whenever the profits comes down, they immediately take their money from the stock market and they move. But FDIs are completely different. They are like investment. So investment in the form of establishing the companies, they could not immediately wind up. This kind of FDI based branch expansion or management control of the another companies. So thereby long term FDI increases, thereby employment opportunities also increase in India. So employment automatically increasing in India. So next one is, so generally US federal bank rate cut means it has the symptoms on international economy as global economy showing the symptom of slowdown. To recovery from this slowdown, generally US Fed Bank goes to the, so this kind of expansionary monetary policy or rate cut. So next, commodity price. So generally commodity price, so because of more money in US market, they go for the more consumption. That means automatically demand increases, increasing in the global demand. So that led to the increasing of the prices of some commodity, especially oil prices. So, but as a India, it is import dependency on the oil, from West Asia. So our current account deficit automatically increases. Generally, we pay the imports in the form of from the current account. So this deficit widens. Understand? Because of costlier imports such as oil, the current account deficit will be more. So these are all the general positive, negative, neutral impacts on the Indian economy due to federal rate cut. So federal bank rate cuts. So this might be asked for mains point of view, discuss the various consequences on emerging markets due to federal bank rate cut or expansionary policy, or they might use it for the testing in your prelims knowledge. So this is all about today's topic. Tomorrow we'll discuss about the next topic.